Swing trading effectively like a pro is exactly what I will teach here so that you can walk away as a better trader. These high-performing strategies have specific steps that you will be able to apply right away. First of all, I would like to briefly cover what swing trading is and why it is so important. A swing trade is a trading position that lasts for more than one trading day, but usually doesn't go on to last for months on end. Personally, most of my swing trades have a range of 2 to 4 days. Another key fact is that swing trading is a lot more accessible than day trading for people who do not have all the time in the world to look at charts. Now let's talk about the awesome strategies that you can start using. The first strategy will be about combining moving averages and trend lines to accurately jump in on powerful entries. Step 1. We focus only on stocks that are in an uptrend. This means that the stock is going higher and higher over time in a healthy way. Realistically, it will probably look something like this. And what we don't want is something that looks like this. Now let's apply the first step. On this chart, the price broke its downtrend on the weekly time frame right here. And this is important because it is very likely that this will be the spark for powerful bullish momentum that can last for months. We can also see that it made a higher low right here, which is a sign that bullish momentum may be starting to pick up. So now all that is left is for the price to surpass the most recent peak that formed during the downtrend right here. So now we can say for certain that we are now in a new uptrend defined by this higher low here and this higher high here. Now for this strategy, we will scale down to the 4-hour or 2-hour time frame and figure out which moving average that price has recently used as a support. I will go with the 4-hour time frame. Okay, so here we are on the 4-hour time frame, and we can see that there has been a clear bounce from this moving average. This moving average is set to a length of 110. Here is something that most people don't tell you. It is very important that you adjust the length of the moving average to fit the movements of the stock, rather than trying to use the same moving average for every chart. This same length would be completely irrelevant on another chart. Now, to continue with our strategy, we need to capture the next time price dips down to this moving average, because it is very likely that it will reverse upwards to continue with its bullish momentum. So we can see that price touched the moving average right here, and now we can move on to the final step. Our entry will be a clear higher high. Price is currently making lower highs and has not yet made a higher high. So we will draw a line across the most recent peaks, and now all we have to do is wait for a close above that line for our entry. With this candle meeting our entry conditions, it turned out to be a huge success. You can also see the price bouncing off the line we made, and this is called a retest. It is worth mentioning that retests are definitely amazing entries if you can catch them. Let's summarize why this strategy works. In our first step, we use the weekly time frame to identify fresh bullish momentum that we can use in our favor. We then figured out which moving average that price used as a support. Once the price starts using a moving average as a support or resistance, that moving average tends to play that role over and over again until it is clearly broken. On top of that, we waited for the price to make a higher high as confirmation for the reversal to the upside to stack the odds further in our favor. These are the 3 steps for this strategy. As a reminder, there is no perfect strategy, but you can certainly be profitable by mastering this one. Guys, if you are enjoying this video, I encourage you to give the video a thumbs up and leave a comment. Your feedback is valuable, and I will respond to every comment. The next strategy focuses on combining candlestick patterns and trend lines to trade along with the trend. So rather than looking for fresh momentum, we will be looking for an opportunity to jump in on an existing uptrend or downtrend. In step 1 of this strategy, we will use the higher time frame to spot significant clues that indicate that the current trend will continue. Let me just mention that for this one, it is completely okay to play either uptrends or downtrends, as long as you are trading in the direction of the dominant trend. Now let me show you a concrete example of how to apply step 1. On this weekly time frame, we identified a trend line that the price has been rejected by multiple times just to continue its downward move. So what we are going to do is wait for the price to reach that line again, and then look for clues of it being rejected again. Okay, so here we are with price creating a long wick, rejecting the trend line, which is a bearish sign. On to step 2. We will analyze the structure that is presented to us in the 4-hour time frame. So right here on the 4-hour time frame, you can see that it actually had an uptrend structure until very recently. So keep in mind throughout your trading journey that a stock can be experiencing different trends across different time frames. The ultimate test here that will determine whether we will go short is for the price to break this trend line. We drew this trend line simply because it is the most recent line that the price has bounced off of multiple times, which means that it is currently significant on the time frame in maintaining the uptrending structure. This brings us up to step 3. Once the price closes strongly below that trend line, that will tell us that the bullish momentum took a hard hit, and that would be a reasonable entry for us to go short on top of all of the facts that we have picked up on so far. You can see that this right here was the entry I described, and it worked out beautifully. Now it is time to summarize this strategy. For our first step, we once again utilized the higher time frame along with trend lines to get a clear picture of what the price is doing and where it tends to get rejected. We then spotted a candle that was giving us a bearish signal off the descending resistance. The long wick of that candle was telling us that buying pressure was strong enough to briefly shoot past the resistance, but selling pressure responded with even more power, shooting the price below the resistance immediately. So the reason I identified that wick as a bearish signal is because it showed that selling pressure won the war during that week. In step 2, we scaled down to the 4-hour time frame and drew a trend line that the current uptrending structure has been respecting the most. It's best to try to draw the trend line that the price structure has heavily been using as support. Usually, the more touches it has, the better. Then in step 3, we took our entry on a strong bearish candle closing below the trend line. I want to mention that what I mean by a strong candle is a decent sized candle. Bigger red candles are likely to make buyers panic and sell their position, which adds more positive factors to our shorting position. On top of all of that, this strategy works because the momentum on the higher time frame is in your favor, and we jumped into the stock with a shorting position as soon as it started agreeing with the higher time frame. So we are kind of doing multi-time frame analysis and waiting for the lower time frames to align with the higher time frame to stack the odds in our favor. The next strategy is called the ultra reversal strategy. That is because these reversals give you the highest risk to reward ratio with a fairly high chance of going in your favor. Step 1. As usual, we will be starting with the weekly time frame and drawing a trend line to capture the important bounce points on this chart. Keep in mind that once we figure out which trend line is being respected, it can act as either a powerful bounce point or a huge reversal if a candle closes below the trend line. I have been showing you the power of trend lines throughout this video and just wanted to make sure that I clarified its purpose. On this chart, we are clearly dealing with a bullish structure. What we want to do is capture an ultra reversal to the downside. Time for step 2. We will wait for or identify a candle closing below the trend line on the weekly time frame. Now that we got what we wanted here, we can move on to step 3, which is to scale down to the 4-hour time frame and identify the most major recent bounce point. So on the 4-hour time frame, we can see that the most significant bounce point was right here. So we will draw a line through it. For the final step, we will take our entry on a strong bearish candle closing below that line. As you can see, this entry was successful. Now this is actually just the start of the result. Let's go forward in time and check in on the weekly time frame. So after some time of holding the position, you would have had a massive 44% profit. Let's say that your stop loss is located right above the purple line. You would have managed to keep your risk around 10% or lower, which makes this an insanely profitable ratio. Now you have more of a visual on why I call this the ultra reversal. This next strategy is going to be focusing on the retests of patterns created by price movement. The first step is to identify a pattern on the higher time frame. So as usual, we will use a higher time frame, and I'm going to go with the daily. As you can see, this stock was in an uptrend until it started forming a symmetrical triangle. So in this case, the pattern is more likely to be bullish. In step 2, for the completion of this pattern, we need the price to close above the triangle. So now we got what we need, and that will allow us to go on to step 3. In the 4-hour time frame, our entry will be a strong bullish retest of the triangle. This candle right here was the retest that we needed, and you can see that it started blasting off. Now once again, keep in mind that we found this pattern on the daily time frame, so it is actually expected for this to go much higher. Let's go forward in time and check in with the daily time frame. As you can see, it went up massively. Once again, this means that you can afford to have an insane risk to reward ratio in your favor. Guys, I hope you enjoyed learning about all these swing trading strategies. I had a lot of fun making this video and am hoping for feedback from you all. Do you want to see more content focused on introducing you to different strategies? Or would you prefer for me to talk about the current events of the market and give you my prediction based on my analysis? Let me know in the comments below. And if you enjoyed the video, feel free to like and subscribe as well so that you can be updated when I release another video. If you are interested in joining a community of traders, I have a Discord server that you can join through the description below. Thank you so much for watching, and I will see you all in the next one.